Hi, how's everybody doing? This is Mr. and Mrs. Silver Fox Forex back with another training tip video. And today's video, I'm going to show you guys how you can use just the moving averages to determine whether you need to jump into a trade or not. And now I removed all my other indicators and just did the candles and two moving averages. I'm going to take you guys over to my charts now. So what I did was I created a chart. I showed you guys how to do that. If you need me to show you again, I will. And I just added two moving averages. So this one right here is a color changing MA, and this is set at 20. This is a 20 MA, 20 moving average. Now you can go to your marketplace, wherever your marketplace is at the bottom, and see what kind of color changing moving averages they have. This is the standard 50 moving average. Okay. This is a pair I don't trade, but just to show you guys um, how easy it is to use just the moving averages to place trades. When you see a lot of traders on YouTube, they'll show you naked charts like this because they don't want you to see the indicators they're using. They want you to pay for them. They want you to pay them for them and stuff like that. This is not what this is about. This is about helping you guys, excuse me, along your trading journey so that you're not lost in the sauce, that you're not out here just, willy-nilly it. And you can use just a simple setup, a simple strategy like this with the moving average. So what you want to look for is when a candle closes on or below or on or be or above a moving average to determine whether you can get into a trade or not. And a lot of people don't know how to do that. So I'm going to show you guys. So I'm going to scroll all the way back to the beginning here. I'm going to cut the auto scroll off. I'm going to use this setup right here. Okay. Now, I'm coming to my computer, right? I've missed all this here. Okay. I missed all this here. And I'm looking like, okay, is there still room for a trade that I can take? Is there still a spot for me to get in? And of course. So let's see something here. So we know that at the bottom of my screen down here, this is how you count. Look at your time, whatever time your computer says, and look down here and see what time it is. That's how you know what time it is in the morning when you look down here in the bottom. So this right here would be 6 a.m. This would be 6 a.m. So 6 a.m. Okay, guys? I'm going to go over 6:05, 15, 6:25, 6:30, 6:45, 7. So at 6:55, this candle closed on or below. Now this is not full confirmation for me. You can get in here, but I don't like that. I need to see a clear picture that the candle is closed on or below or on or above the moving average for me to take the trade. So let me blow this up a little bit just in case for those who can't see it. Here we go. So you see this? This is not a clear indication to get into the trade. What I'm looking for is my 50 moving average to start going down. And right here, it's flat. I can't tell off that. So it starts to go down. So more over here. Okay? This is already going down my 20 color change in moving average. To me, this is a safer indication to get in the trade for a sale as opposed to this, because this can fake you out. This can, you see this? Look, this candle closed on both the moving averages, did a pullback. So what if it did a reversal and continued to back up? Then you'd be messed up because you didn't wait long enough. You didn't put the time in long enough to say, hey, I'm going to wait to see if this is going to go in my direction. So what I'm looking for is a clear picture. Okay? This is clear for me. This is going down. It's a little aggressive because it's still flat. So you can get in here, you can get in here, or you can wait to get in down here when you know that this is curved over enough to where it's coming down. Where this is curved over enough to where it's coming down. Here, I'm aggressive. If I do aggressive at this point, it's here. If I do conservative, it's between these 2 points. Why? Because I can see more of the definition of the gold line going down as opposed to it being flat. You guys get what I'm saying? So, if you're aggressive, you can do here. If you're more conservative, you're between here and here. And your pip stops, your stop loss should always be whatever you're willing to risk, whatever, and it depends on your lot size. So for me, 20 pips is it. It only went 5 pips if it were to go against me. 20 is like way up here because this pair doesn't move a whole lot like that. But my 20 pip stop is set, never went that way. This would have been your first exit point because this has to wick down before it wicks back up into this hammer or pin bar. So this right here, 15 pips, I'm done and I'm out. Okay. So I'm like I said, I tell you what. So you can do aggressive here. I'm looking for conservative, so between here and here. So between here and here, I'm in. Okay, I see more of a definition now. Don't get me wrong now. You're not going to catch every pip, point, stuff like that. So that was 7 pips I missed. Okay, cool. Big deal. No problem. I'm looking at the bigger picture because I want to what? Make profit and not give it away. So as I get in between here and here, bam, I'm down for 11 pips. We're going to wait for the pullback to happen. And then again, where the candle closes it is where I want to get in at. And a lot of people don't understand that. I'm getting in between this point here. When this candle closes here, because I know it's done, even though it closed, below, but I'm looking right here. This candle closed right here. This is my entry point for me to get in a trade. Bam, pull back. This candle started to come down red. I'm looking for this candle to close. So wherever this candle closes at, guess what, guys? Between this point, I'm going to get in and take this trade and go down. And that's exactly what I'm going to do. Once this goes down, pulls back up, this candle starts to go down, I'm going to get in between here and here. And I'm going to draw some little boxes to show you guys. Excuse me, my money hand's itching like crazy. So between here and here, okay? Between here and here. Guys, follow what I'm saying? Between here and here. Now I could go further down, but this example right here is showing you guys what I'm talking about. I removed all the indicators to make this pretty simple, pretty easy, pretty fair, so that it's not hard. You don't need all that confusion. So what I did was, this is where I'm going to enter. This is where I'm going to enter. This is where I'm going to enter. Okay? And then I'm going to show you, it's simple. Bam. I'm in the trade. I'm going to cider. I'm in the trade. Down. Pull back. I'm going to get down right here. I'm out. Pull back. Down. Pull back. Down. Pull back, and you probably get a little bit more of it, and then you're done because it's consolidating down here. You don't want to get in the middle of that. So it's just that simple. You want to look and see where you're going to get in at. That needs to close on or below or on or above. So I'm going to just remove these lines. If you don't, they'll show up on the rest of the chart as I'm getting ready to do a buy. And it's just that simple, ladies and gentlemen. It's not hard. So let's scroll back some. This is a sell. This is mess. Oh my God, do you ever want to avoid this? You don't ever want to get into that. You can make money, but you have to be good. But that's another story. We'll come back to that. So we can use this one. Can we use this one? Yes. I want the picture to be as clear as possible for you guys when it comes to um, your buys and things like that. So I think I can do this one here. I'm trying to get one that starts from the very bottom and come up. It's not hard. This had to be news. And it tells you the dates and times of things that happened. This one is a good one, you guys. This one's a good one. So what happened was this is probably going in a downtrend and it did a pullback. But once it crosses this 50 moving average here, it is no longer a pullback. It is a reversal. In my opinion, 5 candle high is a reversal. Okay, it reversed. So again, coming to you're looking for the candle to close on or below or on or above the 20 and the 50 moving average. Now, if you know it's a reversal and you're a good trader, you can try to catch this stuff here. But that's not what we're looking for. We're looking for to make sure I can get into a spot where where the candles close below or above both these points here. So what I am going to do is I'm going to find that candle. Now people are like, oh my God, man, you missed out on, 10 pips. I mean, yeah, but I don't know. You can't see this because this is normally over here. It hasn't happened yet. So I'm going to go ahead and say, bam, both the lines, this is where the 20 moving average crossed the 50 moving average. Okay, so now I'm going to find something to close on or below both of them. And bam, ladies and gentlemen, I have it. I have it right here. I have it. See how this candle closed and this candle started to form? This right here is going to be a point for me to get into this trade. Now, I'm going to get in between here and here. I'm going to ride it up for 7 8 pips. Okay? You're going to let the pullback happen. And look, oh my God, this closed on or above the 20 moving average. And I'm going to draw another box and show you guys that this is where, see, look, 20 here and here. And I'm in. I caught the first 8 pips, waited for the pullback, and I got back in. As soon as that candle closed, between there and there is where I got in at. Okay? Now I'm going to get in, and I'm going to ride this all the way up to about here. Now, the reason why I say you could go further, but here is good for me. That's 14 pips. Why? Because it's doing a little bit of a pullback consolidation right here. So you're getting a lot of these pin bars and tops and stars. You don't want to you're going to be all day chasing this right here. That was good enough for me to get out. And I'm going to find another entry point. So I said, you want to get in that? Cool. You can wait. You can wait. You can come over here if you want to. It depends on, what looks good to you and what you want to do. So to me, yeah, I can get in here and write it back up. But again, ladies and gentlemen, I want that clear picture. The clearer the picture, the better for me. Okay? And I can deal with things a lot better. Now, I've gotten out here. Drop the line. I've gotten out here. I already did this. I'm out. I already did this. I'm out. Go back here. So now what I'm looking for is another place to get in. I can get in here and write this up. So between here and here. It's not hard. Between that point right there. Get in a trade here. Write it up to here. Another 10 pips. Okay. Got out right there. I'm waiting for this candle to close on or above the 50 moving average. So between here and here, I'm going to get back in the trade. Once I get in here, I'm going to ride this sucker all the way up. Okay. And now as you see me ride it all the way up, because that one red candle here, it's not enough for me to get out. It's just one candle. It's not like you see this pullback here, the consolidation pullback. It's not enough. I'm going to ride this thing all the way up. Now that I'm going to ride this all the way up here, it's time for me to take my profit. I'm not looking for nothing else because why? My 20 moving average is starting to curve off. Even though my 50 is still going up a little bit, but it's starting to curve and bend. Now it continues to go back up, but look at this huge, huge rejection. And you don't want to give any money back to the markets. So at this point here, I'm done. I'm out. I'm not doing anything else. Now look at that pattern from the bottom to the top. All the entries you can get in because you're waiting for the candle to close on or above the 50 and the 20 moving average. Look at that, it's above. 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 All the way up here till I get this consolidation point. Now I could have, and this is where you get tricked, get the fake out, get tricked at right here because it goes up on it a little bit more, then it starts to come back down and retest certain levels, and it goes up, and then you'll start getting the whole consolidation thing. Nope, nope, nope. Look at this. I'm good, ladies and gentlemen. Look at this. Now, if you were to ride it all the way up to the top and stay here and get out, it's 61 pips. That's a lot of time to be waiting. You put in the time, yes, but as a scalper, you're looking to get in and get out. You're making that money. You're putting in the time and making your small profits and taking your profits, and then you're leaving. You're doing your best not to give anything back to markets. You want to trade all those hours you can. Put in the 5 hours, wait for that one setup to happen, or multiple setups, depending on how hard you want to trade that day. And then, you're good. You're good. But see, this is just easy. I'm showing you guys this is simple and easy to go ahead and use the moving averages to trade. You don't need a whole lot of all the squiggly lines on a chart and all the rigmarole that comes along with it. It's not that hard. Your education part you need to learn. You need to read. You need to study. You need to back test. And people are like, oh, back testing is garbage. No, back testing is not garbage. Back testing will show you patterns. So when the patterns start to form, you'll know what a downtrend, the uptrend, a flag pattern, head and shoulders. You'll know what all that stuff is. And you'll be able to like, oh my God, it's forming it. It's happening. What I back tested is what happened. I'm seeing it now. So, I showed you guys the different points, so it's no different than the same thing. You're waiting for the candle to close on or below the 50 moving average. So between here and here, you're going to get in. Write it down, slight pullback, write it down, pull back, write it down. It's just that simple. So I hope this video helps you guys learn how to use the moving averages to determine when to enter and get out of a trade. What your interest points are going to be. You know what I'm saying? Once you see that pullback, once you see this here, you're out. Once you see this pullback, there's this stuff happening here, you're out. Once you see, you know what I'm saying, you get in and you see stuff like this happening, you're out. Boom, 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 boom. You're done. So I hope this was helpful for you guys. If you got any questions, please contact me, let me know, and I will do my best to answer them. As always, take care and happy trading.